A little green on the screen. David Nicholas, our market watcher, right before the market opens. It seems to me that the markets are expecting the Fed to slow down these rate increases. What say you?
Yes, Stuart, that's right. But I think the market is overestimating the decline in inflation and underestimating the Fed's resolve to keep rates high. I mean, Stuart, not a single FOMC member expects rate cuts in 2023. If you just read the December minutes, which I don't encourage anybody to do because it'll put you right to sleep, but by the Fed's own admission, they said by us going from 75 basis points down to 50 basis points in December, that should not be interpreted as any weakness in our resolve to maintain our mandate on full employment or stable prices, nor should be interpreted that we believe inflation is coming down. That was pretty hawkish language. So, Stuart, I think we get 25 basis points this week. I think the market will initially rally on that news, but whether or not that rally lasts will be determined on Jerome Powell's language. And I think his language will be hawkish, which is why I think any rally that we see this week will be short-lived. Based on what he says, Stuart.
So it's a short-lived, kind of knee-jerk rally that we're seeing this week. Okay, I got that. Now, you think we should be investing more in small-cap stocks. I know you don't recommend individual companies, so give me some kind of group that I can put money into that's all small-cap. How do I do that?
Sorry, Stuart. The market's not cheap, right? Trading at 18 times earnings. Small caps right now are trading at the lowest multiples in almost a decade. So one way to play it is in the small cap value space. There's a ticker called SLYV that is a small cap value ETF, owns over 400 companies. But what I like about that index, Stuart, that ETF, is the multiple right now is trading at only 11 times earnings. You compare that to the market, you're getting a pretty good discount from an earnings standpoint. And also, historically, small caps recover much quicker and do much better in economic turbulent times than large caps. So we think that you want to get in before we see the big rally in small caps, Stuart.
Well, you know, I've had a nice rally in some of the tech stocks that I own, or the tech stock that I own. Is that going nowhere?
Sorry, I think we're a little toppy on the NASDAQ, and I do think that the large market cap indexes like the S&P and the NASDAQ, they're the most crowded trades in the world. So as investors, we want to rotate from some of those really crowded trades really into a less crowded trade, and that's where small cap value still has a lot of room to run, Stuart. So we might want to consider doing a rotation to those other areas.
No, I'm not selling. I don't want to pay the capital gains tax. Don't want to do anything like that. I'm just hanging in there for my retirement. What's it? David Nicholas, thank you very much, sir. I know we'll see you again soon. Knee-jerk